All right, so I got a pretty wild story here for you guys on how Wall Street goons are continuing to basically just consume massive swaths of the housing stock here in the United States and preventing millions of Americans from participating in what is supposed to be one of the main ways that we're able to build up wealth in this country, and that would be owning a home. So here from the New York Post, they say Goldman Sachs-backed firm buys an entire Florida community for $45 million. So we're going to get into the details of this specific one, but obviously I'm bringing you this story because this is just one specific anecdote within a much larger picture here. So they start us off saying there's no end in sight for Wall Street's Sunbelt sojourn. A pair of Goldman Sachs-backed ventures gobbled up an entire rental home community in Florida last month for a cool $45 million, according to reports. And they say Fundrise Interval Fund and Growth EREIT 7 picked up 87 single-family properties in Brevard County as part of an ongoing southern spending spree. And Fundrise previously snatched up a 120-unit development in Pensacola and has been pouring money into other rental developments in states like South Carolina and Mississippi. And with rents continuing to soar and demographic shifts ongoing, real estate experts said Wall Street's southern appetite will only intensify. And Ken Johnson, a professor of real estate at Florida Atlantic University, said firms are following population trends and investing in previously disregarded regions of the country. And they say here on some of the debate and disagreement surrounding how much impact are these Wall Street firms having on the cost of housing for average Americans. They say some critics have correlated Wall Street's embrace of single-family rental homes with unprecedented price increases over the past several years. Anecdotes abound about aspiring homeowners having their bids avalanched by corporate competitors with deep pockets. And Florida has seen rents spike by more than 30% overall, while other Sunbelt states have seen similar hikes. And they say, but Johnson argued that corporate purchases remain a drop in the bucket of overall home transactions throughout the country. And other analysts contend that increasing mortgage rates will now spur even higher rents, with would-be home buyers opting for the sidelines. So, a little bit weird phrasing here because they're not really opting for the sidelines. They're being forcefully pushed out of the housing market by a lot of these Wall Street firms. But listen, I'm not trying to make it seem like these Wall Street firms are the entire picture, right? There's estimates, as we're going to get to here in this Slate article, basically showing that their purchases, Wall Street firm purchases, have accounted for roughly around 15% of the total purchases that are made within the housing stock. But, very simple supply and demand logic here would obviously indicate that to some degree, a large degree, that this is going to have an impact if you have gigantic, in some cases, trillion-dollar asset managing firms that are just buying up the housing stock, restricting the supply, and offering all cash offers on a lot of these single family homes. That's obviously going to have an effect of reducing the supply for other people who are just normal home buyers, and is going to be pushing them out of the market to some degree. So it's not the entire picture. I also think in combination with potentially banning trillion-dollar corporations or asset managing firms from engaging in this type of predatory market acquisition within the housing market. On top of that, we should also be obviously building much more public housing, and that would be a way to expand the supply and drive down the costs. So it's not the only issue, but it's definitely a large issue. So again, here from Slate, they give us another perspective saying investment firms aren't buying all the houses, but they are buying the most important ones. So what do they mean by that? They say the median price of an American house has increased by 28% over the last 2 years, as pandemic-driven demand and long-term demographic changes send buyers into crazed bidding wars. And they say, might the fact that corporate investors snapped up 15% of U.S. homes for sale in the first quarter of this year have something to do with it? The Wall Street Journal reported in April that an investment firm won a bidding war to purchase an entire neighborhood, again, this is a different context, but the same exact idea, worth of single-family homes in Conroe, Texas, as part of a cycle of stories drumming up panic over Wall Street's increasing stake in residential real estate. Then came the backlash as cool-headed analysts reassured us that big investors like BlackRock remain insignificant players in the housing market compared with regular old American families. So it's kind of disingenuous to say that, because it's only 15% of the total market that, therefore they're not having any meaningful effect on the cost of housing. It's completely ridiculous. Again, even if it is only 15% of the total, sales of housing within the United States on a quarterly basis, even if it's only 15%, well, that 15% could easily be the difference, between millions and millions of people being able to afford the housing that we're talking about in question here. But they say the truth is between the two. We can panic and acknowledge Wall Street's small role at the same time. And although the number of houses being purchased by mega investors is currently not enough to move the market in most parts of the country, these firms' underlying structural advantage is profound and growing. So they give a specific example here for context, saying, let's focus on Invitation Homes, a $21 billion publicly traded company that was spun off from Blackstone, the world's largest private equity company, in 2017. And Invitation Homes operates in 16 cities, with the biggest concentration in my home city here in Atlanta, where it owns 12,556 houses, though that's not much compared with the 80,000 homes sold in Atlanta each year. Invitation Homes bought 90% of the homes for sale in some zip codes in Atlanta in the early 2010s. So again, they're talking about, even if it's a small number in the grand scale of how many houses are being sold, they're clearly concentrating in very specific zip codes that they think are going to return the highest returns on investment down the line in the years to come here. So it is very specific in certain, counties or zip codes that you're talking about here, but nonetheless, obviously is going to have a dramatic effect in pushing people out of these zip codes and specific housing markets. But they continue saying, while normal people typically pay a mortgage interest rate between 2% and 4% these days, Invitation Homes can borrow money for far less. It's getting billion-dollar loans at interest rates around 1.4%, so just tiny interest rates here. And in practice, this means that Invitation Homes can afford to tack on an extra $5,000 to $20,000 to purchase to the purchase price of every home, while getting the house at the same actual cost as a typical homeowner. And while Invitation Homes uses a mixture of debt and cash from renters to buy houses, its offers are almost always in cash, which is not something that average Americans can do, which is a big leg up in the competitive market. So you kind of see the issues here, right? Obviously, it's not the entire picture to say that private equity firms are gobbling up the entire housing market, but 15%, or in the case of specific zip codes that we're talking about here, upwards of 90% of the housing stock in any given area, with the added advantages of them being able to do all cash offers, because they're able to get billion-dollar loans for lower interest rates than average home buyers are able to get on their mortgage rates. Clearly, they have a structural inherent advantage within the way that the American economy is working right now in order to take control of large portions of this housing stock. So, obviously you should be blaming them to a large extent, but also at the same time, you should be blaming the federal government for, a two-pronged reason. Number one, this should completely be illegal, in my opinion at least. You shouldn't have gigantic trillion-dollar asset managing firms or corporations or billionaires in any way whatsoever legally have the ability to buy up something that should be at least considered a human right and a basic life necessity like housing. I think we should completely decommodify housing at a very fundamental level. I don't think, maybe you could make in the United States the argument that you could have some, small landlords, mom and pop landlords, as some people like to call them, where you own a couple different properties, maybe you have a couple tenants. Okay, I'm not a fan of it, but maybe you could make that argument here in the United States. But you definitely should not have, in any functioning society, massive corporations with trillions of dollars to throw around having the ability to just buy up all of the housing stock, pushing average Americans, working class Americans out of that market, and then turning around and price gouging them on the rent. I mean, effectively what they're doing here is just creating a permanent rental class of middle and lower income Americans who are never going to be able to, again, participate in something which is the main way that Americans are able to build wealth over time. So, they're basically just stealing from the American people by weaponizing the fact that our government has no checks whatsoever on, corporations having the ability to buy up something that, again, should be completely decommodified and shouldn't be considered as a, something that you buy and sell on a market. It should be something that's guaranteed to everybody in the wealthiest country that has ever existed on the face of the planet. But again, it's not just the fact that private equity firms are buying up the housing stock. It's also the fact that the federal government is completely failing to invest in public housing in any meaningful capacity whatsoever. So just as a reminder, Build Back Better included $170 billion for affordable housing. Here's where it would go. So it doesn't really matter to look into the details of this because Build Back Better is completely dead. I mean, Joe Manchin, Kyrsten Sinema, a couple other corporate Democrats managed to basically single-handedly completely tank this entire bill. So we don't even have a federal government that is even attempting to address the problem here because, it's a very, very basic supply and demand. You have the problem of gigantic asset managing firms that are restricting the supply, but but you also have the problem of the government not increasing the supply of housing in order to drive down those costs. So, at the end of the day, again, I am a socialist, so I'm going to have a socialist perspective on this, which would require the complete decommodification of a marketplace like housing. I completely think that this should be considered a human right. It shouldn't be something, definitely not, where trillion-dollar asset managing firms are able to buy up this stock and push people out of the marketplace. So, even if you want to take the mild approach or the moderate approach or the watered down approach to the problem here, at the very least, you should bar these massive corporations from being able to engage in this predatory market consolidation in the first place, creating that infinite rental class that is never going to be able to own a home. On the one hand, one, you should be banning that practice altogether, but two, you should also be making dramatic investments, definitely much more than $170 billion over 10 years. I mean, that's, $17 billion a year on something that is one of the biggest issues that Americans are facing right now. Make it at least, 10% of what we spend on our military every single year, invest in public housing, make sure that it's guaranteed as a human right to every single American. So, clearly we got a problem with the housing market here in the US, but this is all intentional. Nothing is being done about this for, the same reason nothing good ever gets done for average working class Americans, because our government is bought and controlled by the same gigantic asset managing firms that are buying up the housing stock and that want to prevent any adequate investment in public housing.